You did it. Seriously, take a second. After all that searching, you found the one, and your offer was accepted. That is a huge deal. But before you start planning the housewarming party, there are just two final steps. Today, we're going to pull back the curtain on the appraisal and homeowners insurance. Yep, the last two hurdles standing between you and getting those keys. Man, that phone call, right? The one where they say, the house is yours. It's such an amazing feeling. But once that initial excitement settles a bit, you're probably thinking, okay, what happens now? Before you even think about renting a moving truck, there are a couple of really important things we've got to tick off the list to make it all official. I want you to think of these last two steps as a couple of gatekeepers. But listen, they're not here to block you. Just the opposite, really. They're here to protect you. The appraisal and insurance, they're like this big financial umbrella, shielding what is probably your biggest investment from any surprises down the road. They are absolutely essential for your peace of mind. Okay, let's tackle that first gatekeeper, the appraisal. This step is so important because it answers one critical question for both you and your lender. Is this house actually worth the price you've agreed to pay for it? So what is an appraisal really? Well, it's an unbiased, professional opinion on a home's value. And here's the bottom line. Your lender insists on it. Why? Because they will not, I repeat, will not lend you more money than the home is officially worth. It's a safety net for them, for sure, but it's also a huge protection for you, making sure you're not starting off your homeownership journey by overpaying. That brings up a great question, right? How in the world does an appraiser come up with this magic number? You know, it's not just a gut feeling or a quick walkthrough. There's a real science to it. An appraiser is basically a detective. They're looking at a few key things. First, the overall condition of the house. You know, its size, the layout, any obvious issues. Then, and this is a big one, they look at comps. That's short for comparable sales. Basically, what have similar homes in that same neighborhood sold for recently? That gives them a solid baseline. They'll also flag any required repairs, which is super important for government-backed loans like FHA and VA loans. And here's something you might not know. You don't go out and hire the appraiser yourself. To make sure the whole process is totally impartial, your lender orders the appraisal through an independent third-party company. This keeps everything objective and fair for everybody involved. All right, so this all sounds pretty straightforward. But this is the part of the journey where things can get a little nerve-wracking. What happens if the number the appraiser comes back with doesn't quite match your offer? This is the question that can keep homebuyers tossing and turning at night. You found the home, you agreed on a price, you're already picturing your furniture in the living room, and then you get the news. The appraisal came in low. Okay, first thing, take a deep breath. Do not panic. We call this an appraisal gap, and it is absolutely not the end of the world. In fact, you've got a game plan. Let's break down your action plan. Option 1, you go back to the seller and renegotiate. You now have a professional report in your hand, which gives you some serious leverage to ask them to lower the price. Option 2, you can actually challenge the report. If you and your agent think the appraiser missed something important, like a better comp down the street, you can present that new data. And option 3, if you have the cash and you still feel like the home is worth it to you, you can choose to cover that difference yourself. The point is, you have options. You're not stuck. All right, once you've successfully navigated the appraisal, it's time to meet our second gatekeeper, homeowners insurance. This is another one of those must-haves that you'll need locked in before you can get to the closing table. So if the appraisal is what confirms your home's value, think of insurance as the shield that protects that value. It's the thing that stands between your biggest investment and all the unexpected stuff life can throw at you. You know, things like fires, theft, or a crazy storm. So what's your to-do list here? Number 1, shop around. Please do not just take the first quote you get. Talk to at least 3 different companies because prices for the exact same coverage can be all over the map. Pro tip, ask them if you can get a discount for bundling it with your car insurance. Once you've picked a policy, you have to send proof of that insurance to your lender. They absolutely will not let you close without it. Okay, we've cleared the 2 big hurdles. Now, let's quickly talk about how you'll actually pay for your insurance and your property taxes, because it all gets neatly bundled together in something called an escrow account. Here's a little secret that makes understanding your monthly mortgage payment so much easier. A good chunk of that payment isn't actually going towards your loan balance. Nope. It's being set aside into a special account to cover your homeowner's insurance and your property taxes. So what is this escrow account? Think of it like a savings account that your lender manages for you. Every month, you put a little bit of money into it as part of your mortgage payment. Then, when those big yearly bills for taxes and insurance are due, your lender just pays them for you using the money in that account. It's like a forced savings plan that makes sure those super important bills always get paid on time. And this is the aha moment for so many homeowners. If your property taxes go up or if your insurance premium changes, your lender will adjust how much they need to collect from you for escrow each month. That is why your total monthly payment can go up or down from year to year, even if you have a fixed rate mortgage. It's not your loan that's changing, it's the escrow. So let's put it all together. By getting through the appraisal, you've officially proven the home's value. By getting your insurance in place, you've put a shield around that investment. See, these aren't just annoying chores. They are the fundamental steps that make you a smart, responsible homeowner. And the best part? The finish line is so close.
You've faced down the gatekeepers, and you've come out on top. You understand your home's value, you've protected your investment, and you know exactly how it all fits into your monthly budget. There's really only one question left to ask. Are you ready to go sign those papers and finally get your keys?